Hey, I hope your day is going well. Welcome to Dead Finance, where I share my personal financial journey while having some Deadlock playing in the background. In this video, I'm going to be sharing why I contribute to my 401k, the benefits of having a 401k, and thoughts on soon reaching $100,000 in my 401k. Before we get into that, I must stress that I'm not a financial expert. I'm only sharing my personal financial journey, so nothing in this video should be taken as financial advice. Is simply for entertainment. Please do your own research for your personal journey, as everybody's situation is different. Let's get into it. As the title suggests, I'm close to reaching $100,000 in my 401k, which is a tremendous milestone. As of February 11th, when I was creating this video, my account was at $99,926. But before breaking down my 401k, I want to provide a quick overview of what a 401k is and why you may want to consider contributing to one. A 401k is a type of tax-advantaged retirement account offered by employers. Money that is contributed to this account is money you earn prior to taxation, or pre-tax contributions. By contributing to a 401k, you reduce the total gross earnings that's reported to the IRS. This means you reduce the amount of income subject to taxes. This allows you to save on taxes in the year you are contributing to the 401k. If I max my 401k on a $106,000 salary by contributing $24,500 in 2026, which is the max contribution limit, I would avoid paying $7,669 between state and federal taxes for that year, which is unbelievable savings by maxing this account. Another massive benefit to contributing to a 401k is that there's often an employer match. This means that the company you work for will contribute additional money to this account. Every 401k plan is different, so you need to look into your particular 401k to see if there is a match and how the match works. For my employer, they contribute 50% up to 6% of my contributions. This means if I have a $100,000 salary and I contribute 6% or $6,000, my company will contribute $3,000 that year. It is important to note that the employer match does not count towards the 401k max contribution limit. So if I max my 401k by contributing $24,500, the total contributions for the year will be $27,500, which would include that $3,000 employer match. Depending on your current financial situation, financial experts often recommend contributing the minimum amount that maximizes the employer match. In our example, this would mean contributing 6% in order to maximize that employer match. This is one of the few times where it's pretty much free money, until you're taxed in retirement, of course. Again, it is important to assess your personal situation before seeing if you can afford to contribute to a 401k. By afford to contribute, I mean that by adding money to a 401k, you will reduce the amount of money hitting your bank account. So you need to create a solid budget and see if you can still cover all expenses while also contributing to this account. An important note on employer contributions is that there's often a vesting period for this money. This means not all of the employer match is actually your money until you are fully vested, which means you stayed with the company for a specified amount of time. Oftentimes, your vested amount increases year over year. For example, in your first year, you may be 25% vested, meaning 25% of the total employer contribution is actually your money. The second year may be 50%, and so on, until you're fully vested, and all the past and future employer contributions are now considered your money. One aspect of a 401k that can be viewed as a negative is how the money in the account is taxed in retirement. Despite potentially gaining huge tax savings today, the money you take out of a 401k in retirement is taxed as income. not capital gains, like a taxable brokerage account. This means depending on how much money you earn that year through other sources of income, such as a rental property or side hustles, you could be facing a large tax bill if you're also choosing to take large sums out of your 401k that you saved up. This could be upwards of a 30 to 35% tax rate on income or withdrawals that would exceed $200,000. This is why having different account types available at retirement is critical, such as a taxable brokerage account or a Roth IRA, to balance the amount of taxes owed in retirement. But I can make another video on that someday. So back to my account. I started contributing to my 401k in March of 2022. I like to keep a majority of my investments simple by mostly contributing to ETFs and mutual funds. So for my 401k, I only contribute to an S&P 500 type fund, specifically FXAIX with Fidelity. Another popular example that would be the same as mine is VOO or VOO with Vanguard. You must check to see what funds are available to you through your plan. Some plans can be limited in investment options. Generally, financial experts recommend broad market ETFs, such as the S&P 500 or the total United States stock market, like VTI, if you've heard of that fund. As of February 12th, my 401k balance was at $99,926, and the breakdown is very interesting. Since first contributing in March of 2022, of that $99,926, my personal contributions makes up $64,175. My employer matched and contributed $11,205. I lost $694 to fees. I had a market gain of $25,240, and I received $1,823 in dividends, which those dividends are automatically reinvested into that fund. This means that my total contribution of $64,175 turned into $99,926, or a gain of $35,801. And that's thanks to my employer match and the capital appreciation, which is absolutely amazing and serves as a perfect example of what consistent savings and financial discipline can get. I'm super happy to be reaching 100K in a single investment account. It'll be interesting to see how the compounding takes effect, as a 10% annual gain or loss in a year would result in a change in value of $10,000, which is insane. So that's not money that I'm contributing. That's just the market changing and the effects on the amount of money I have in the market. Well, that's all I had for this video. I hope you enjoyed it. If so, give the video a like and comment below if you're currently contributing to a 401k. And if you're not, is it something that you're going to look into, perhaps in the future? Some future videos I have planned include a look at my other investment accounts, which would include my Roth IRA and my taxable account. Another video I plan on making is an overall view of my financial journey since graduating college in 2019. If these video topics sound interesting, please subscribe and hit that bell to be notified when these new videos drop. I'm excited to continue making these financial journey videos for you. I've enjoyed the process so far, and it also acts as a timestamp of my progress whenever I make a video or give an update. Well, that's all I have. I hope you all have a wonderful day. Take it easy.